So you have been thinking about investing in the stock market. You have been thinking about developing your investing journey. You now know the difference between active and passive investing. You're now aware of the risks associated with investing in the stock market. You are now aware of diversification and you are thinking, what do I do next? What do I need to do to start my investing journey? When we return, I will show you exactly what to do next. I will take you through how to open an investing account with Vanguard. I will also show you how I track one of my investments with Vanguard. At the end of this video, you'll be thinking, it's so simple. Why didn't I start a bit earlier? There's nothing difficult about doing this. Hello everyone, my name is JP of JP Financial and Accounting. Everyday finance made simple. On this channel, we try to train, we try to coach, and we try to equip you with relevant money management skills that you need in your daily lives. And of course, we always try to glean as much wisdom as possible from scripture. Before we go into this week's content, I just want to say thank you to everyone for the support that I have received since we started this journey together. When we started this channel, we didn't know where it would lead us. But this week we reached a milestone. We reached our first 100 subscribers. Our next target is 200 subscribers. If there is any content that you feel that you want us to share together, that you want us to explore, please post it in the comments below and we'll try our best to share and to research that content. Also, please continue to share these videos with your family, with your friends, with your acquaintances and associates. This will help us to grow this channel. If you are new to the channel and you have not already subscribed, please do subscribe to the channel. It will help us greatly to reach a larger audience. I will also encourage you to share this content with young people especially, because investing in the stock market takes a long time to yield dividends. So the younger you start, the more likely that you are going to be successful. Please encourage your young people to look at these messages and see what they can do to help themselves on their investing journey. Once again, thank you. In the previous 2 weeks, I recorded 2 videos called Investing for Beginners Part 1 and Investing for Beginners Part 2. I intended this to be a 2-part video series, but after reviewing the 2 previous videos, I recognized there seems to be a gap somewhere where some things have not been quite clear or where things have not been clarified as I would have liked to. That's why I decided to record this 3rd video. In this video, I just want to show you how easy it is to open an investing account so that you are not terrified thinking it's something difficult. You'll notice it just takes a few minutes. But before we go into that, I just wanted to do a quick summary, which I've called the do's and the don'ts of investing. Personally, I don't like anything that is prescriptive or something that tells people what to do, but I couldn't find a better way of sharing this. Please remember that I am not trying to prescribe or instruct you on what to do. I am just trying to make you aware of the potential pitfalls as you invest in the stock market, but also to show you the tips, the hacks, and some benefits that you can accrue when you are investing in the stock markets. Also, I must state that I am not sponsored by Vanguard. I am not recommending Vanguard over any other investing platform. I'm just showing you using Vanguard because I currently use Vanguard and I'm quite familiar with how it works. So you could use other providers. For example, you could use Hargreaves Lansdowne, you could use eToro, Trading 212. There are many other platforms out there. Do your research and find out which one works best for your needs, for your personal circumstances and your personal situation. As I said, I came up with 4 do's, 3 don'ts to summarize the content of the 2 previous videos. We'll quickly go through these before I show you how easy it is to open an investing account. Okay, the first do is do your research. Please do your research before you start investing. Try not to invest in something that you do not understand. Try and make sure that you read as much as possible and understand as much as possible before you start investing. So that's the do number 1. Do your research. Do not jump into the swimming pool before you know the basics of swimming. My second do is do diversify your investments. You'll remember when we looked at diversification in the last video, which of course I will link below and you can click on it up here. We say diversification ensures that you are not putting all your eggs in one basket. Unless you are 100% sure that the investment that you are putting your money in will yield a good return, I would say try and diversify as much as possible. And of course, we did speak about using index funds and ETFs as a way of diversifying. My third do is watch out for fees. You know, when you are using an investing account, the provider or the platform charges you fees. And if you are not careful, or if you do not keep a close eye on the fees that they charge, you may discover that a huge chunk of your returns will go into paying those fees. So try and use platforms that will not charge you a huge sum for using them, or a huge percentage of your earnings. So watch out for fees. Look out for fees. How much will this platform charge me when I use them for investing? The fourth do that I have on my list is something that we spent a full video on. I'll link the video below and you can click on it here. I recommend that you go and watch it. Is keep an emergency fund or keep a rainy day fund. You do not want to invest your rainy day fund, because if you invest it and in emergency, you may be forced to sell your investment at a loss. So do not invest your emergency fund in the stock market. Instead, keep it in a separate savings account. You can try and research the savings account that will give you the best return. And again, I did another video on different types of savings accounts. Again, I'll link it below and you can click it on here if you need to check that video out. The different types of savings accounts and which savings account are best for different situations and circumstances. Then we move on to the don'ts. My first don't is please do not wait. Do not wait and think, I'm not ready to invest now. I'll invest at some point in future. Start now. You need to develop that habit. Developing the habit is more important than how much you are able to invest at the moment. Remember, you can start investing from as little as £1. And remember also, what we need is time in the market. We do not try to time the market. The longer you are in the market, the better the return. Remember, when we're talking of investing, we're talking of 5 years, 10 years, 20, 30, 40 years. So the younger you are and the longer you are on the market, the better the return will be for you. So do not wait. Talking about timing the market, that's my next don't. Please do not try to time the market. Remember, we spoke about what timing the market is in another video. Timing the market, we said, is speculating on what the shares will do and trying to gamble on what the shares will do, thinking you will make a killing. It is possible to make a killing over a day, but in most instances, when you try to gamble in the stock market, you will lose your investment. Remember, in another video, we shared that 90% of all investors, both experienced and new investors, lose money in the stock market. So don't try to time the market. Instead, spend time in the market. The third and the last don't that I wish to share with you is do not be emotional when you are investing. As I've already said, remember, investing is not gambling. Please don't invest based on emotions, but invest based on reason. The reason for this is if you are emotional, you are likely to make the wrong decisions. So don't base your investment decisions on your emotions. For example, if one day you hear that the BP share is doing well in the market, then you put all your eggs in that BP share, and then the next day you hear that the Amazon share is doing well, then you're thinking, let me move my money from the BP share to the Amazon share. It's likely you are going to lose money in the stock market if you do this. Make sure that your investing decisions are not based on emotions, but they are based on consistency over a long period of time. Especially to the young people, I would say start your investing journey early in your life and make sure that you are in it on the long haul. When you go to the Vanguard website, this is the first page that you will see. And they already start with a warning there. Please remember the value of your investment can go down as well as up. So you may get back less than you invest. So that's the warning of the risk of investing in the stock market there. So this is the home page. And then the next tab on there, they talk about why you should choose them. That's a marketing tool there, why they think you should choose them. And then they refer you to their 40 years experience and their 4 simple principles of investing. What we offer, in this tab here, they show you the different funds that Vanguard offers, starting from ETFs, index funds that we've spoken about, life strategy funds there, and then they've got this section where they've got the ISAs, the Vanguard ISA, the Junior ISA, the General Account, and the Pension Fund. So these are all the investment options that you can choose. I think this is the most important page that you should read, where they give you education. Remember when I spoke about the do's, I said do your research. This is where you can do research. You can read a lot about what these funds have on offer. And then here, this help and support page, they tell you about how to get started with your investing and how to manage your funds and investments. So there is a lot that you can read there. This here, I think, is very important, and I must state this is what attracted me to Vanguard, where they talk about charges, fees, and taxes. You remember when I spoke about dues again, I did say watch the charges. And these investing vehicles can prove to be very expensive if you're not careful. You end up paying a significant chunk of your investment in terms of charges and fees. Vanguard's fees are quite low, I must say. If you already have a Vanguard account, then you can log in this section. But if you don't, of course, you can open an account here. You'll have noticed in all these different tabs, there will have been an option to open an account. So if you click in any of them, open an account, it will tell you what you need to open an account. This is a UK website, so different country websites might have different options, but they are largely similar. It tells you what you need to open an account: your national insurance number, your debit card details, and your bank details. This is only required if you want to pay in regular payments as you invest. And of course, it does say here on the next screen, you'll be asked which account you want to open. You can click here to start your application process. And then as you can see here, it gives you the different types of accounts that you can open. This is the Vanguard Stocks and Shares ISA, which I recommend for beginner investors. The Junior ISA, we haven't spoken much about the Junior ISA, but the Junior ISA is if you wish to invest for your children at the age of 18, they can draw down on that investment. And the allowance for the Junior ISA is £9,000 a year. And then the General Account, of course, I wouldn't recommend that you open a general account unless you have exhausted that 20,000 allowance that is allowed on your ISAs. The last section there is the pension. We'll talk about this in another video. When you click on that, then you get to this section where it tells you about opening an ISA. There's a lot of information there. There are 4 links that you can click to read about the features and the declarations of all these, So if you click on any one of these here, it will open a PDF, and this PDF will give you the key facts about opening an ISA, which of course we say it stands for Individual Savings Account. There is a declaration, a privacy policy, terms and conditions. When you have read all these documents, then you click here to say you have read the documents, and then you can proceed. There are blended funds, equities, fixed income, and cash. Okay, if you expand that there, it will show you the different blended funds. For an ISA, there's what they call the life strategy funds. 20% means you're investing 20% in equities and 80% in fixed income. 40%, you are investing 40% of your funds in equities and 60% in fixed income. This is a way of diversifying. Remember, we spoke about diversification. In Life Strategy 100 Equity Fund, it means everything that you are investing is invested in equities. Remember, we said that equities are risky. So what I would recommend here is, depending on your age, if you are young, you can invest everything in equities because you have a longer time in the stock market. But if you are older, I would recommend that you invest less in equities and more in fixed income. If you click here again, a PDF will open with the key investor information for all these funds. You can choose to invest a single lump sum, or you can choose to invest regularly in monthly payments. So if you have 20,000 to invest now, then you can put 20,000 in that box. Then you are investing 20,000 in one go. You notice here at the bottom, it says the remaining ISA allowance 0 because you have invested the full allowance in one go. Let's say you don't have the 20,000 to invest, but you have 2,000 pounds that you can invest now. And you enter 2,000 pounds there. You notice the remaining allowance now is 18,000. And then you can say, let's say you choose to invest another 100 pounds a month. If you enter that, then you have regular monthly payments of 100 pounds. When you are done here, you click next, and then in this page it will ask for your details. So you fill in your name. Notice that national insurance number, that is a requirement. And then you fill in your address, you fill in your date of birth. When you have done this, then you click next. It will come to this next page where it will ask you to create a username and a password. And you'll notice there the rules. Your username must be between 8 and 16 characters, so forth and so on, and the requirements for your password. And also you can add a mobile number for security. So when you are done on this page, then you can click next. Then it will take you to the next page where you can complete the transaction. I also wanted to show you what we mean by the stock market can be volatile. This is one of my investments here. You notice it's going up and down, and you'll see here October, heading towards the US elections. The markets were really down and it was right at the bottom. But since the US elections, you notice after November the 3rd, it started to rise steadily. Again, you can see the ups and downs, the ups and downs. The other thing I wanted to show you is how from month to month you can gain and lose money. For example, you see in October, my investment had lost £438. If I had withdrawn there, I would have lost £438. But you see how it bounced back in November. My investment gained another £1,200. In December, so far, it's gained £233. So that's the point really that we're making about investing in the stock market. If you try and time the market, you could lose money. But if you are there in the long term, you will smooth all these ups and downs. I hope this demonstration has helped you understand how easy it is to invest in the stock market. And again, you need to try and read as much as possible before you start your investing journey. Finally, let us go to our verse of the day. Our verse of the day today comes from Matthew chapter 25, verse 26 to 28. But his Lord answered and said to him, "You wicked and lazy servant, you knew that I reap where I have not sown, and gather where I have not scattered seed. So you ought to have deposited my money with the bankers, and at my coming I would have received back my own with interest. So take the talent from him and give it to him who has 10. This is from a familiar parable, the parable of the talents. You notice what Jesus is saying here. He's saying we must invest. We must invest so that we receive our investments with interest. We must invest the time that God has given us. We must invest the resources so that when he returns, we can show him a return. Remember in this parable, what this young man had done, he had hidden his talent in the ground. And Jesus says, you are wicked. The words wicked and lazy are quite strong, really. So we do not want, when our Messiah comes back, to be called lazy and wicked. Strong words. So let us learn to invest everything that God has blessed us with. Invest our time, invest our resources, invest in our children, invest in our churches. In everything that we do, let us do it with all our might, so that when Jesus comes, we are not called lazy and wicked. I hope you have enjoyed this video. I hope you have benefited from it. And as usual, please like the video. If you are new to the channel, please click that subscribe button and also that notification bell so that you are notified when we post new content in this channel. Thank you very much. I appreciate all the support that I am receiving. Remember, our target now is 200 subscribers. Please help us to reach that milestone. God bless.